Everyone, and welcome to Big Business This Week. I'm Dave Briggs on the floor of the New York Stock Exchange. Tesla stock has its pedal to the metal, surging on an earnings beat and optimistic forecast from Elon Musk. Meanwhile, Elon is under fire from the Justice Department for potentially breaking election laws by giving away $1 million a day as Trump's top donor. Here to talk about the road ahead for Tesla, equity strategist and chair of the Electric Vehicle Committee at Morningstar, Seth Goldstein. Seth, good to see you. Thanks so much for coming on. Investors are very impressed with this report. What is your headline?
Well, my headline was that Tesla's profit margins likely bottomed in the first half of the year in the automotive business, where we saw a strong profit margin increase from the first half of the year in the third quarter. We also saw energy generation and storage deployments lead to record profitability, with management raising its deployments guidance for the full year and ramping up the new factory in China to continue the growth in 2025. So the real big takeaway for me is that all of the company's long-term investments are finally starting to be realized as far as cost reductions for the cars, ramping up the full self-driving software, and building out the energy generation and storage business.
Much of the profit side of this was on what's called regulatory credits that people don't frankly understand. If you could, for our viewers, explain what regulatory credits are and why they're such a big deal for Tesla.
Yes, so in certain places like California or Europe, automakers need to meet certain emission standards. And if the current cars that they're selling do not meet those standards, they have to buy credits in order to be able to offset the current product lineup. So if you're selling all diesel or heavy emission trucks, let's say, and you need to make your regulatory standards, you're going to need to buy credits from someone like Tesla, who is a pure electric vehicle automaker. Tesla's benefited from this greatly in multiple years, and we've seen as emission standards have gotten tighter in markets around the world, that's led to more automakers needing to buy credits from Tesla to the tune of over $700 million this past quarter, helping Tesla boost profit margin and generate more free cash flow.
All right, so stop me if you've heard this before. Elon made overly optimistic projections in the call, targeting 20 to 30% vehicle growth in 2025. Now, context, deliveries are down 6% through 3 quarters. He counts that by saying, quote, "These are my best guesses." Are they at all realistic?
Well, given Elon's track record, he hasn't been too great of a near-term forecaster. So I'm somewhat skeptical that Tesla will hit the 20 to 30% deliveries target next year. What that means is they need to launch this new, more affordable vehicle that they're planning to move into production in early next year. And not only that, it needs to flawlessly ramp up towards a multiple $100,000 production, or excuse me, multiple 100,000 unit production throughout 2025. I don't think that's going to happen based on Tesla's historical track record. I do believe the new, more affordable vehicle will lead to 2026 deliveries seeing double-digit growth, but likely not in time for 2025. So I view Elon's forecast as slightly optimistic for the automotive deliveries growth.
Yeah, we have seen plenty of those over the last decade. He said no more $25,000 Tesla. Those plans have been couched or at least maybe eliminated. The robo-taxi is next. Margins are up, you mentioned that, but they're also up on the Cybertruck. Do you view the Cybertruck as a success at this point, or can it be down the road?
I think the Cybertruck is somewhat of a success. Now it's profitable on a gross margin standpoint, so it's no longer dragging down profitability for Tesla. And it still is a unique vehicle. It offers some cool tech out there. So I never viewed the Cybertruck as something that was going to drive massive deliveries growth for Tesla. But I do think that the Cybertruck is going to be a vehicle that highlights Tesla as a cool, differentiated tech player and makes people more interested in the brand.
Yeah, it's probably the most divisive car anywhere on the planet at the moment. So the big question over all of this, and for investors like, and analysts like yourself, is Tesla a car company? Elon says it's an AI and robotics company. How do you view it?
Well, Autos is still the biggest business, and I think will be the biggest business for at least the rest of the decade, if not longer. So I still view Tesla as primarily a car company, but you have a growing battery business, you have a growing automotive software business, you have insurance, you have EV charging. So Tesla is expanding just beyond selling cars, yet cars will still remain its primary business.
And Elon will remain in the headlines for a wide variety of reasons, but in particular as former President Trump's top donor and what Tim Walz's calling his running mate. I won't ask you to get into politics at all, but my question is, what do you hear from investors and fellow analysts? Has this had any impact on the perception of the company or potential auto sales down the road?
I think that there's a lot of concern that if Elon Musk is going to um, move to support Donald Trump and the Republicans, then he could turn away some Democrats from buying a Tesla. And those who may buy a Tesla would seek an alternate vehicle. So far, the numbers haven't shown that out. We've seen growth in all Tesla models except the entry level Model 3, where for that vehicle price category, we've seen all EVs decline due to higher interest rates, making payments unaffordable for many consumers. So far, we haven't seen it materially affect Tesla's deliveries. I'm sure there are some people who have not bought a Tesla because they don't like Elon Musk's politics, but we haven't seen that yet. It does remain an ongoing risk in the US if Elon Musk wants to continue to wade into political issues.
Yeah, theoretically, most EV buyers would tend to lean left, which certainly seems like a risk down the road. Never a dull day covering Tesla. Really appreciate the time, Seth. Thanks so much. We want to bring in now Kyle Orland from Ars Technica, who has some interesting reporting on Elon's autonomous, or is it, Optimus Robot. What are we learning?
Yeah, so at the We Robot event recently, they had these autonomous robots that actually came out into a party and actually interacted with guests. They were pouring drinks, they were talking to guests, they were doing a rock, paper, scissors battle. And people were pretty impressed with this. You know, this wasn't just a video, this wasn't just an on-stage canned demo. But Elon Musk was very careful in his wording. He didn't actually say that these were autonomous robots. He said along the lines of, this is a vision of the future of what they can do. And reporting came out afterwards that these robots were actually being teleoperated by human controllers. So really just kind of fancy remote control toys at this point.
Very interesting. Have they confirmed this? Have they had any comment about it? And why ultimately does this matter? How important is the Optimus robot?
Yeah, Tesla hasn't responded to comments, but there's enough reporting out there that I'm pretty confident in it. There's even some video of one of the robots saying that we are not fully autonomous yet, in what sounds like a human voice from a teleoperator. The Optimus robots are, when you talked earlier about Elon Musk's projections for the future, he says that in the long term, everyone on Earth will want one of these. And, you know, based on the abilities he's projecting, I could see why. He says they can, you know, do anything a human could do. Who wouldn't want that in their house? But you know, based on what they have now, we're so far away from that. I can't imagine that in the next 10 years, we're going to have anything even close to that level of autonomy.
All right, thanks to Kyle Orland and Seth Goldstein. Never a shortage of Elon headlines. Coming up, it's the Yankees versus the Dodgers as the World Series brings in plenty of cheddar for the business of baseball. More on that up next. Welcome back to Big Business This Week. It's the World Series equivalent of King Kong versus Godzilla, RoboCop versus Terminator, if you will. Baseball's two biggest markets, two iconic franchises on opposite coasts with rabid fan bases that stretch between New York and LA. Ticket prices for Dodgers Yankees, ready for it? In Taylor Swift territory. The most expensive ticket ever. MLB Network reporter extraordinaire, I presume diehard Swiftie, John Morosi joins us now. John, good to see you. Won't ask your favorite Taylor song unless you feel like it. So those are the things on the surface. But to a lifetime baseball man like yourself, What is driving prices? What is driving all the excitement? What makes this series so sexy?
Well, Dave, it should be a very exciting fortnight for baseball fans. There, you see what I did there with the Swiftie reference. Yes, it's going to be a lot of fun. And I think in general, we have not seen this, of course, for more than 40 years. The last Dodgers-Yankees matchup was back in 1981. So for a lot of fans, it's the first time in our lifetimes that we have ever seen the Dodgers and Yankees playing in a World Series. And I think that the overall excitement, yes, from New York to LA, it's tremendous, but also around the world. It goes certainly to Asia, to the markets that have grown loving the game now in Europe with MLB playing the London series multiple times. So this is going to be, I think, Dave, one of the greatest celebrations we have seen of the modern game because of the constellation of stars who are involved.
And that's, I think, an important point. We don't watch cities, we watch stars. Who are they in this series? Why do they matter?
So let's start with the Dodgers. Shohei Ohtani, one of the most recognizable athletes in the world, coming off a 50-50 season with the Dodgers, the likes of which we had never seen before. Mookie Betts, also like Ohtani, a future Hall of Famer, along with Freddie Freeman, a future Hall of Famer. We'll see how available Freeman is. Of course, he's been dealing with a leg injury in recent days. So that's the Dodgers' bold-faced names, you could say, in terms of their superstars. Then on the Yankees side of things, Aaron Judge, a future Hall of Famer, likely MVP of the American League. You've got their ace pitcher, Garrett Cole, starts game one. He's a future Hall of Famer. Giancarlo Stanton building his resume as a Hall of Famer. Juan Soto, who certainly might bring us an occasion to talk again in the offseason about what numbers he'll hit as a free agent. Maybe it's going to be close to the Ohtani range from a year ago. So superstars, and it reminds me, Dave, of the way that we watch the NBA now, where if it's LeBron, you might be following LeBron or Durant or Embiid or whoever the biggest names are, Steph Curry. It's now that kind of a vibe in baseball, which doesn't often happen. Certainly last year it didn't. It was the Rangers and the Diamondbacks, and there weren't a lot of superstar players that were recognizable around the world in that series. It's a very different situation this year, and for that reason, Dave, I won't be looking at necessarily what the market share is on the local Fox affiliate in Grand Rapids, Michigan. I'm looking for the streaming numbers around the world, the impressions on social media. Baseball is about to have a moment in the modern social media and media culture of the United States and beyond.
Well said, sir. Ticket prices double what they were just a year ago. $1,000 standing room only for these games. And that's why the Wall Street Journal has a headline, "The Dream Postseason That Saved Baseball." That is a massive statement by the Journal. What have we seen from ratings leading up to the series?
Really good. And the ratings overall have been encouraging, Dave. Year over year increases for both Fox Sports and TNT Sports, which broadcast the League Championship Series up until this point. Of course, on Fox, you had the Mets and the Dodgers meeting up, and that's a great matchup, another New York, LA series. And then whenever the Yankees are involved, it is great for ratings. And we have to remember, too, the Yankees have not won a World Series since 2009. It's been 15 years, which by their standards is a century's worth of waiting. And for the Dodgers, the last time they won the World Series was 2020. It was played in a bubble, small crowds in Texas. So they haven't won a World Series at home, or one that they played at home, since the 1980s. So it's a very important historical moment. I'm not sure that I would say that it has saved baseball, because I think baseball was already in a really good position because of Aaron Judge, because of Shohei Ohtani, because of the growth of things like the World Baseball Classic, and just social media in general. We have seen in recent years, Dave, a real modernization of the way the game is covered and the way the players present themselves. For a long time, baseball had this sort of hidebound aura about it, where maybe the players and the teams and the marketing efforts were kind of old-fashioned. That's changing because the players are younger, they're more athletic, they're more exciting, and they'll share themselves on social media in a way that we really associate more with maybe soccer players or basketball players. So I think it's been very healthy for the game. Does this save the sport? I don't know that I'd go that far. I think the game was already in a great spot, but I would say this: it is amplifying how great the game is right now.
How is the pitch clock factored in here? How has it improved the game, the pace of the game, and the length?
You know, Dave, it's a great question, and certainly I work in this sport every day, so I'm working games at the ballpark. I get a feel for what it does for the broadcast that we do, but I also have casual baseball fans in my life who will say to me, yeah, the pitch timer really has helped me out. I know the game's going to probably end in 3 hours, and you get to bet on time, and it's a more entertaining product. I think all along it wasn't the issue with the action. It was basically how much action per minute spent watching. And you want those, oh my goodness, aha moments to account for a larger percentage of the time that you're spending watching the game. And with more balls in play, more exciting moments in the game, you saw it with the Yankees, all those late game homers, and the Guardians had a couple of their own, of course, which made it really exciting. So I think we're just seeing a more exciting brand of baseball, and the pitch timer has been, I believe, Dave, one of the most important innovations in baseball in my lifetime.
Interesting. Okay, so these are also two of the biggest payrolls in baseball. Spotrac has the Yankees at $309 million, LA above $240 million. I know those estimates vary a little bit, but is that what it takes to win a ring today from a business perspective? Can a small market team compete in this space?
Well, it's an excellent question, Dave, and it's a challenge. We saw that the Diamondbacks make it last year. They have certainly a mid-tier to below payroll. You look back at the previous decade, the Kansas City Royals have been to more World Series since 2010 than the Yankees have. The Royals 2, the Yankees 1. So you can win with a smaller payroll, but there's no question that it's a lot harder. And let's go back to the ALCS that we just watched unfold. Very closely matched, some late game drama throughout. But what happened was the Yankees out-superstarred the Cleveland Guardians. Giancarlo Stanton, Aaron Judge, Juan Soto, they had the big moments in that series, and they are the highest-paid players on that team. And certainly Garrett Cole had a lot to say, too. So did Carlos Rodon, major free agent investment. So can smaller teams compete? The Brewers almost beat the Mets, but they didn't. And what was the big moment? Pete Alonso, who's an expensive player, had a massive moment. Francisco Lindor late in the year. He's a major signing. Without Lindor, the Brewers probably advance instead of the Mets. So I do think superstars will help you win at this time of year, and the matchup in this World Series shows that. It's certainly an advantage, and hopefully for the industry, it's a good message about the value of stars as we enter free agency this wintertime.
And that is the business of baseball narrative this Rockies fan is sadly all too familiar with. There's a player, maybe the biggest superstar of all that we haven't mentioned, who will be present, I think, throughout at least the Dodgers games. I think you might see no more number 34 jerseys than any other. Why?
Fernando Valenzuela, Dave. He's an icon in so many ways, an icon in the U.S., an icon in Mexico. He came from a tiny village of Echahuaquila, Mexico. He just passed away this week, and one of the most beloved figures in the history of Los Angeles. Note I didn't say Los Angeles sports, I said Los Angeles, because when the Dodgers moved to LA, the story is well known, basically residents, many of whom were Mexican-American, were displaced from Chavez Ravine, which is where the ballpark is now, and that fractured the relationship, understandably so, for the Dodgers and the Latino fan base in LA. When Fernando Valenzuela had Fernando Mania back in 1981, he unified the fan base, the Anglophones and the Spanish speakers all together in a way that we had never really seen before in Los Angeles. And I think for that reason, he occupies a very rarefied place in the storytelling of Latin American fans in LA, and overall, what a bridge he has been for the unique blend of people who cheer for the Los Angeles Dodgers. So it's certainly a heartbreaking and poignant moment that he'll be celebrated and honored before Game 1 on Friday night.
Okay, who's the favorite? Who you got?
New York Yankees in 6 games, Dave. I think they're the tougher team to face right now because they're really disciplined about not swinging at pitches outside the strike zone. So the Dodgers pitching, they're able to be very creative with their staff against the Padres, against the Mets. The Yankees will be a tougher task. I believe New York wins this series in 6 games.
Love to have you back in the offseason, talk about other business issues facing the league. MLB Network reporter extraordinaire, John Morosi. Great to have you, my friend. Coming up, the big business stories you may have missed this week, including why Starbucks star may be dimming. Welcome back to Big Business This Week. Peter Green writes the BBTW newsletter. He joins us now with some big stories of the week. Peter, good to see you. So Venti, perhaps even Trenta, my coffee size problems at Starbucks continue. What are we learning now?
Well, that explains a lot, Dave. My coffee size is a lot smaller, whatever they call the little one. Well, the problem is that the company is really, it just hasn't innovated. They have moved to filling online drinks, which have made the in-store experience less interesting, less exciting. You wait in line, the stores aren't particularly attractive anymore. And that diminishes the reason people are going to pay over the odds for that cup of coffee. I mean, you could be looking at $16 for one of these fancy drinks by the time you get through with all the syrups and alt milks and creams and stuff. So Brian Nichols come in, he turned around Chipotle, and the idea is he's got to figure out what is the value proposition at Starbucks, and he's got to build on that. And he's in a very, very fortunate position. The day they named him, the share price zoomed up 25%, and it stayed there. A few little fluctuations, but it's still up there at close to $100 a share from about 70 something the day he was named. That means he's got time to figure out what'll make Starbucks work.
Yeah, it's amazing the amount of faith investors have in Nichols' turnaround plan, and we don't even know what that plan is. He's talked about the community coffee houses customers remember, but quite frankly, I don't remember those, and the younger Starbucks customers have never seen that type of Starbucks. They're used to what we have now. Another CEO in the news. It's a mulligan for the House of Mouse. Disney will try to get Bob Iger's CEO succession plan right the second time around, but it's not in the lightning lane. This will take time. When will it happen? Who are the names to watch? Why is this so important?
So it's going to happen early 2026. The first name to watch is the new chairman that Disney has appointed. He's the former CEO and chairman of Morgan Stanley, a guy named James Gorman. He's got a sterling reputation in the finance and business world. His main job is to run a search committee that isn't yet fully formed and find a successor to Iger. There are 4 in-house people. Don't ask me the names. No one's ever heard of them anyway, but one runs theme parks, one runs the studios, etc. And then they could be looking outside for someone. Hard to know where they're going to land, but giving themselves over a year to find the successor to Iger means that they are going to give a lot of runway to the guys inside the company and see how they deal with a transition mandate that Iger and Gorman and the board are going to have to give them. Don't forget, Iger just fended off a challenge from an activist investor, Nelson Peltz, who wanted to completely change the way Disney was operating. That didn't fly with shareholders at the end of the day, but it was a pretty close squeeze. So there's a lot of work clearly to be done at Disney. I mean, share price is down. If you look at over the last 5 years, share price is down 26%. Something's got to be done to turn Disney around. And Iger is on his second turn at the wheel of this company. I think he's ready to go, and I think the board of directors is ready to find somebody else with a new vision.
Yeah, the names to watch inside. I understand Dana Waldman would be the inside voice that people think will get promoted. I would love to see the ESPN boss, Jimmy Pitaro, who I know is one of those names in-house they are considering, but we haven't seen much of a plan from Disney other than raising the prices at Disneyland, and that could honestly backfire, really going to come from the studio side. Interesting things to watch there. Thanks so much, Peter. Sign up for his newsletter at Cheddar Big Business Newsletter by going to cheddar.com/BBTW. That is going to do it for us this week, but don't go away. Much more Cheddar up next.